welcome to the earnings season. Things are finally getting kicked off this week. It's sort of funny because different industries tend to concentrate their earnings in certain weeks. Like banks are always the first. I think consumer staples tend to be the last. And tech is like kind of near the end there too. So it'll be a lot of banks this week. And I think those will start cooking tomorrow morning. The bigger news tomorrow morning, evidently, is going to be the CPI. It's a monthly number. They provide the core CPI for the month, the overall CPI for the month, and then the yearly year-over-year CPI. I would note that for the past 4 months in a row, I think core CPI has come in well under predictions. And it seems the impact of that seems to be kind of diminishing because people want a low number, but it's kind of being met with a shrug of the shoulders these days. I believe tomorrow's anticipated number is 0.3%, and the yearly is 2.6%. Got a pretty decent head for simple numbers, so I think this is right. So we'll see. That's an hour before the open, and that should maybe shake things up a little bit. What didn't seem to shake things up anymore is the whole tariff wars. On Saturday morning, news came out that, well, Trump is going to have a 30% tariff on all the European Union and Mexico. And it's like, whoa, that's kind of big news. And fittingly, when futures open on Sunday, everything was red. And now everything is green. So nobody cares anymore. I don't know if it's the taco effect. I don't know if it's just machines don't care anymore. Irrational exuberance, it doesn't matter. Lifetime highs every day. We can announce 300% tariffs for every country in the world, and I don't think anybody would care at this point. It's just cruising right along. So it's become tempered to that, whereas in early April, every little percentage point is freaking people out. Let's thumb through the charts and see what's going on out there, although you kind of get the gist of it. Here is the spider, and we have spent the past 7 days or so kind of banging around into nowhere. There's certain sectors that are at lifetime highs, and there's some that are just kind of on a daily, hourly, minute bar basis, just grinding away. And spider's definitely in grind mode. And there we have it. It's up just a little bit. The ES is up 0.18%, just kind of hanging out. There's definitely some sectors more interesting than others. Tech is a little stronger, and the cubes have also spent 1, 2, 3, 4, 5, 6, 7 trading days just kind of hanging out. They had their last big pop on July 3rd, and that's pretty much to the penny where things are right now. SMH, the semiconductors, are incredibly in the red. They've been somewhat on the weak side today. Maybe the tariff news affected them a little bitty bit. Of course, they're extremely lofty. What's interesting about this chart, and I see this in ES also, is that the prior lifetime high is acting as support now. So this dashed blue line is anchored to the lifetime high back on almost exactly a year ago, July 11, 2024. And we pushed above that a few days ago, and we were weak this morning. Look where we wound up. I mean, I wonder how close that is. The level is 281.82. Today's low, 281.76. Not officially, but that's what I have. Let's call it perfect. I mean, that's crazy. An exact touch. And although I'm not showing it here, I'm seeing the same thing with the ES. Because way back last year, first half of December, I think, the ES reached a lifetime high. And it stayed below it ever since. And a couple of weeks ago, it was close and close and close. And finally, I think on Wednesday, it jumped above it. So what had been resistance for the longest time is now support. And what happened this morning was that, futures open Sunday, they gapped down. They kind of ambled along for a while. And then around midnight, that's kind of where they bottomed. And they got very, very close to that line at, I think, 62.58. Close to that. But that was support. It used to be resistance, now support. So with all the weakness and all the selling in futures between Sunday and Monday's open, they didn't go below it. So that support level is crucial. So if there's any bears left out there, you've got to break that. Otherwise, the bulls have gone from an exceptionally strong position to an incredibly exceptionally strong position, because now they have this super high level of support, 62.58 on the ES. Now, Bitcoin is still raging, although it's a little off the crazy highs we saw earlier today. Last week, I mentioned around here, somewhere around here, that it looked potentially poised for a big pop higher, because there's all this pent-up energy that had been developing, because it had a big pop higher in mid-December. On inauguration day, it had very slightly a lifetime high. Then it started falling, which was bizarre because there's so much political tailwind behind crypto. And that bottomed, not surprisingly, around the time everything else did, back around April 7. And starting on April 9, when the white flag went up over the White House, things exploded higher. And so we have gone from around 75,000 to about 125,000. So almost a 70% rise in about 3 months. And that's just on Bitcoin. I mean, on the altcoins, it's probably hundreds and hundreds of percent in 3 months. But lifetime high today. But I will note that we've got a shooting star pattern on this. We are presently about $3,500 below today's lifetime high. If it starts selling off, you have very firm support at around the 110, 111, 112,000, around there. It would take a failure of this line. You would have to break below like 109,000 to really say, okay, failed bullish breakout, they're in trouble. As it is now, they're giddy, and some are taking profits. And if it sells off even $10,000 more from here, it's still okay for the bulls. It's got to break below that level for there to be any trouble. So IBIT, which is the big Bitcoin ETF, obviously also a lifetime high, and also obviously a big red bar right now because it opened quite strong and it's been selling off through the day. Even so, it's still up about 1.25%. MSTR strategy, they might have considered a new ticker symbol because it's not micro strategy anymore, but they've kept that. Anyway, it too has cut above this line, which is kind of similar to the one I was showing around 109,000. And it's up more than that, up more than I bet. It's up about twice as much percentage-wise, 3.42%. Ethereum also up, but this trend line still counts. This trend line means something. This is anchored way back here to the big bear bottom in June 2022. And we broke it with quite a lot of gusto here around in March. And now we're back to it. And so someone wrote me today saying, well, we're above that trend line. Well, yeah, a little, I guess, but it didn't matter. I mean, trend lines aren't made of titanium. They can sneak a little past here and there and still count, especially one this big. This is how long? 37 months, am I right on that? I think 37-month long trend line. It is not to be trifled with. And so, yeah, it was above it briefly. It doesn't really matter. I mean, it's got to just jump across it with its Nike shoes on and stay above it for it to change from resistance to support. It is very much still resistance right now. And there we sit just below it. So crypto a little vulnerable now, to say the least. Relatedly, kind of, since it's sort of a dollar is doomed trade also, GLD gold is on the red side. The front month on gold itself is off a little bit, like $6. And more importantly, from a charting perspective, is this gap, 310.31. And that is the peak from Friday. And so long as it stays below that, gold's a little vulnerable too to selling. And of course, gold hasn't had the crazy rise that Bitcoin's enjoyed over the past few days. It's been just kind of hanging out. Gold's really passionate exuberance ended like 3 months ago, April 22. New lifetime high bearish engulfing patterns has been just kind of ambling around ever since. I better pick up the pace. It's getting late. CRK, Comstock Resources. Good day here. This is one of the few long ideas offered up. But this is a beautiful cup with handle, and it's having a good day. This is just kind of a fun one. I couldn't believe it when I saw this chart. And if you're curious about this, because I was when I stumbled upon it Friday, what on earth? I've written about it. Just go to slopeofhope.com and type Mullen, Mullen, in the search, and you'll see the article. I just did a little post about this because it's quite an extraordinary tale. This is a like 12-cent stock now, but it's been reverse split so many times. I think if you look back in 2012 when it was much higher, the reverse split adjusted price is like $31 quadrillion. It's quite the change, but not often you see a chart like this, but it's real. It's not a leveraged instrument. This is a real common stock. So kind of a crazy story if you're curious. Here's something more normal, Apple. And this one, just noting that it's seems sort of stuck below its own very long-term midline of this channel. So Apple's not looking very well poised. Some stocks definitely stronger than others. Apple, the bloom's kind of off the apple rose at this point, just to mix metaphors. A couple of other bear setups, both cosmetics, Estee Lauder, EL. There's the line on that one. And ELF, ELF Beauty. And here's the line on that one. So a couple of related ideas. I would also take note that CoreWeave is having a good day, but it's formed a cute little top right here. This is a very young issue, hasn't been around for very long at all, but it's lost, I don't know, about a quarter of its value or so from its peak here, but I just kind of keep an eye on that, if nothing else for curiosity's sake, because it's pretty heavily traded, and I do like the look of that top, miniature though it may be. Energy's on the weak side today. Here's XOP, down about 1% on this one. Also XLE, touch more than 1% down on this. Oil's on the weak side today. Crude oil's down about 2% on the front month, and that's being reflected in these others. And individual issues too are on the weak side. So this is kind of a bearishly poised sector in general. Energy, BP down about 1.75%. Here's BTU, Peabody Energy, down about 2.3%. I'm going faster because I don't have much time left. Halliburton, down about 4.33%. Hess Corporation, down a bit more than 2%. And one last one, just to round it out, Schlumberger, SLB, down about 3%. So energy across the board, selling off. Nothing to do with energy, but one other short I've got going right now is Restoration Hardware. I don't think they call it that anymore. They just call it RH. But this is a bit more than 2% off today, and below this massive overhead supply. It's already lost 3/4 of its market cap, but we're kind of in a new era on it now, and I do think that this resistance at 217.60 is very formidable for RH. And the last one, we're going to get out of here just in the nick of time, TLT. My biggest short, down a little bit, about 1/4%, but very important to watch this tomorrow on the heels of the CPI report. Stop on this one very tight at 86.5, but we'll definitely catch up with that in tomorrow's show to see what happened.
If you're not subscribed, subscribe right here. And if you want to meet me and the team in person at our next live event, hit the link at the top of the description.